Hello students, welcome back. This is Dr. Mercado. Welcome to Accounting 1303, Introduction to Accounting 1. In this lecture, we are going to be covering content from Chapter 3, which deals with the double entry framework. In this specific lecture, we are going to be covering Problem 3-11A from your assignments, which you should see on your exam. Now, this is a very comprehensive problem dealing with posting transactions into T accounts and then preparing a trial balance. As stated in prior weeks, please make sure that you do read the chapter before you begin working on your assignments. My lectures are not a supplement of your reading. You still have to read so you can gain knowledge about all of the content in the chapter. In my lectures, I pick and choose information that relates to the specific problem that we're covering. It doesn't cover the entire chapter. Okay, so it is your responsibility to read the chapter, review the PowerPoints, so on and so forth. Okay, so what are we going to learn in Chapter 3? Okay, some of the information that we're going to be learning in Chapter 3 deals with defining the parts of a T account. We're going to learn how to foot and balance a T account. We're going to describe the effects of debits and credits on specific types of accounts. We're going to analyze transactions using T accounts, and we're going to prepare a trial balance. Now, what is a T account? The T account basically gets its name from the fact that it looks like a letter T. There are three major parts of an account. We've got the title, the debit or left side, and the credit or right side. This is how all accounts are structured. We always have the title on top, debit left, credit right. Okay. To determine the balance of a T account at any point in time, we simply have to total the dollar amounts on the debit and the credit sides. Now, these totals are known as your footings. When you get the subtotals on the debit or credit side, that is your footings. The difference between the footings is the actual balance. Okay, and the balance is placed on the side with the highest balance, usually the normal balance of the account. Now, in my courses, I usually don't ask students to memorize or remember a lot of things, but these two things on the screen you have to learn by heart. Okay, so please spend some time not only memorizing, but understanding what is it that's happening. Okay, the first figure we have here is the accounting equation. In this chapter, we're going to begin to identify if a transaction needs to be debited or credited. Okay, so we need to figure out, depending on the type of account it is, what it is. You know, if it's an increase, am I going to debit or am I going to credit? Now, the accounting equation, figure 3.2, gives you a great illustration of what is it that we need to do. So, for example, assets. Cash is an asset. If cash increases, we debit. If cash decreases, then we credit. So you have to identify what type of an account it is based on the accounting equation. And then if it's an increase or a decrease, that translates to whether it's a debit or a credit. Okay, so let's look at liabilities. For example, we've got accounts payable. Okay, if your accounts payable increases, you credit it. If your accounts payable decreases, then you debit. Okay, the same thing on the owner's equity section. You just have to identify what kind of an account it is. Let's say it's an expense account. If it's an expense account and the balance is increasing, most of the, I would say 99% of the transactions to an expense account are increases because we are keeping track of where we're spending our money, then we would debit. On rare occasions, we would be crediting it if it decreases. Okay, revenues, that is money that you generate off of your business. If it's revenues that you've generated, your revenues have increased, you credit. If revenues decrease, then you debit. For the drawing account, the same thing. If your drawing increases, you debit. If it decreases, you credit. We will be referring to this a lot. I recommend that you print it out and that you have it handy. That way you can refer back to it as we are completing the analysis of the transactions. Okay? Now, figure 3.3 deals with the normal balances of the accounts. A normal balance is the side of an account that is used to increase the account. Okay, so the normal balance is where the accounts are being increased. Okay, so for assets, we've got our increased debit, decreased credit. Therefore, my normal balance would be a debit. Okay, for liabilities, okay, liabilities are increased with a credit. So my normal balance is a credit. So we're looking at what is causing my accounts to increase, depending on the type of account it is. Okay, so depending on the type of account it is the normal balance that we're going to have. So liabilities, owner's capital, revenues, they all increase with a credit. Assets, expenses, and drawings, they all increase with a debit. Okay, so those are the normal balances of the accounts. So what does that mean, Dr. Mercado? That means that when you tally up your balances on the debit and the credit side, your balance for assets should always be on the debit side. Your balance for liabilities should always be on the credit side. Your balance for owner's capital should be on the credit side. Your balance for revenues should be on the credit side. Your balance for expenses should be on the debit side, and your balance for drawing should be on the debit side. And we will illustrate that in the next problem that we're going to be doing, where we're posting these transactions to our T accounts so we can see whether the ending balance is on the debit side or the credit side. Okay? So, here we have the problem. It's kind of long, so bear with me. If you get tired of listening to me for a while, take a break and then come back. This is a long problem, okay? But I wanted to explain it to you in detail because you'll see this on your exam. So it's very important that you understand what I'm doing, okay? So we're going to start off. It says Robert Watson started a business in May called Watson's Home Repair. Watson hired a part-time college student as an assistant. Watson has decided to use the following accounts for recording transactions. And we've got a list of accounts. Now, I've already created T accounts for all of these. Okay, so under assets, we have cash, accounts receivable, supplies, prepaid insurance, equipment, and van. Okay, these are all of the accounts given. Liabilities, I only have one liability, which is this should be accounts payable. Okay. And then under owner's equity, we've got our capital account. We've got our drawing account. Under expenses, we've got rent expense, salaries and wages expense, phone expense, gas and oil. And under revenue, we've got one revenue account called service revenue. Okay, so I've already laid out all of the different T accounts, okay, along with their normal balances. This, I'm basically picking them up from the expanded equation. I brought them in. Debit addition, credit subtraction, liabilities, debit subtraction, credit addition. So I basically copied this information into my problem. That way it makes it easier for us to follow, okay? So we have a whole bunch of transactions, as you see, quite a bit, okay? We're going to go over each of them in detail, and then the requirements are at the bottom, okay? We are going to enter the transactions into the T accounts. We're going to identify each transaction with its corresponding letter. We're going to foot and balance the accounts where necessary. And then last but not least, we are going to prepare a trial balance. Okay? So, let us begin. Okay, so let's start off with letter A. Okay, we invested cash in the business. So I'm looking at transaction A right here. Invested cash in the business, $25,000. So what did we receive? We received cash. Do we have more or less cash? I've got more. Because I've got more, that's a plus sign. I'm going to go ahead and I'm going to debit my cash, $25,000. Okay. Now, when I invested cash in the business, what did I get? What did Robert Watson get out of putting $25,000 into the business? Well, Robert received capital, right? So we've got the capital account for Robert. Now, does Robert's capital went up or down because he put money into the business? Robert's capital increased, so therefore I am going to credit the capital account. Now, after every transaction, you need to make sure that your debits and your credits equal. I have a debit for $25,000. I've got a credit for $25,000. So now we're not only dealing with transactions, but we're dealing with balancing the debits and the credits. So we have to make sure that the accounting equation stays in balance and that your debits equal your credits, which they do here. I've got one debit and one credit. Okay, so this is letter A. Let me just notate it here. Letter A. That way we know that this has to do with letter A. Transaction A. Okay. Now, letter B. We purchased a van for cash, $6,000. Okay, so we bought a van, letter B. Okay, so I've got a van. Remember, if your asset increases, which in this case it did, my van went up by 6,000. I'm gonna debit. So letter B, I've got my van for 6,000. I'm sorry about that. How did I pay for the van? Well, I paid for the van with cash. It says purchase a used van for cash, 6,000. So your cash decreased. Because your cash decreased, now I am going to credit. Now, when we are using T accounts, we don't enter any numbers with negative numbers. Okay? Debits or credits, they're all positive numbers. What tells me if it's an increase or a decrease is the type of transaction. For assets, if I've got a credit, that means it's a decrease. Okay? So I've got a decrease of $6,000. Okay? So cash went down. This is letter B. Okay? So cash went down $6,000. It decreased $6,000. The van went up $6,000. So I've got a debit to the van. I've got a credit to the cash. So I've got one debit and one credit. I'm in balance. Okay. Letter C. You purchase equipment on account, $4,000. So we bought equipment. So do we have more or less equipment? I've got more equipment because I bought equipment. So if I've got more, my equipment is increasing. So my equipment is going, this is letter C. Okay. I just bought equipment of $4,000. My equipment is increasing. And it says I purchased my equipment on account. Did I pay for the equipment today? No, I did not. I bought it on account, which means I owe money. So if you owe money, where does it belong? Remember, liabilities is anything that you owe. It's your debt. So it needs to go under the liabilities section. Okay? So I've got a liability. Now, what happened to my liabilities? Do I owe more or do I owe less? Because you bought this equipment on account, your liabilities have increased. So if you have an increase, we are going to credit the liabilities by $4,000. This is letter C. Okay. So my liabilities have increased. So I've got, look at the, I've got equipment gets debited. I've got accounts payable gets credited. Remember, debits always equal credits. Okay. That takes care of letter C. Letter D, you receive cash for services rendered, $7,500. So what does this mean in plain English? You provided a service, you charged $7,500, and you received cash, which means you got paid. So the first thing is, what did I do? Well, the first thing I did was I provided a service. Okay, so anytime you provide a service, that goes to your revenue account over here. Okay. Now, did your revenues increase or decrease? Well, you provided a service, therefore your revenues would be increasing. So my service revenue account would be credited for the $7,500. This is transaction D. Now, I provided a service. I credited at $7,500. How did I get paid for it? It says here you received cash. So when you receive cash, do you have more cash or less cash? Well, I don't know about you, but when I get cash, my cash goes up. So it increases. So that means that my cash is going to be debited. This is letter D. I'm sorry about that. So letter D, I received cash for $7,500. So if you see here, cash gets debited, service revenue gets credited. I've got a debit and a credit. That's what we need to always make sure that we do. Debits equal credits. Okay, so that's letter D. Letter E, you paid cash on account owed from transaction C. So remember, in transaction C, we bought a piece of equipment for $4,000 on account. Now on transaction E, I am making a partial payment of $2,300. So I owe $4,000. I am going to pay $2,300 of that. So what's going to happen to your cash? Well, your cash is going to decrease, okay? This is letter E. Letter E, yeah. A, B, C, D, E. Letter E. So letter E, what's happening to your cash? It's decreasing because you are making a payment. If your cash decreases, then you credit. Now, what's happening to your accounts payable? You used to owe $4,000. Now your balance is decreasing. If your balance decreases, then, let me insert another row here. If your balance decreases, then what's going to happen? I would need to debit the account for $2,300. This is letter E. Oh, sorry about that. So, I've got my transaction. I've got a debit to cash. I'm sorry, let me see. What are we doing? That paid cash on account. Okay, so cash gets credited, $2,300, and accounts payable gets debited. So I've got a debit to accounts payable and a credit to cash. Okay, remember, debits must always equal the credit. So here we have a debit and a credit, so we're good there. Okay, so that is letter E. Letter F, you paid rent for the month, $850. Okay, how do you pay your rent? Well, I don't know about you, but when I pay my rent, I pay it with cash. Okay, so what are we paying? We are paying the rent. What is rent? Rent is an expense. So all of your expense transactions should be debited. I'm increasing my expenses. Okay, anytime you pay something, it's an increase. Okay, this is money that is accumulating in these accounts because you had to spend it to operate your business. You need to pay the rent to be able to have a place to hold your business. So we're going to pay the rent. Rent expense will be debited. And what letter is this? This is letter F. Okay. F. Okay. So letter F, and let me move this over here. And I am paying the rent for $850. So $850, my rent expense is increasing. I am going to debit it. Now, how am I paying for the rent? I am paying my rent with cash. Cash is decreasing. So that means I will need to credit my cash for $850. This is letter F. Okay. So that takes care of letter F. I've got a debit to rent expense. I've got a credit to cash. Debits and credits equal. Okay. So that takes care of letter F. Letter G. You paid the phone bill, $230. The same thing, it's just a different account. Phone bill is a phone expense. Okay. So this is letter G. E, F, G. Okay. So I paid the phone bill. Let me just move this over here. Okay, so I paid the phone bill for $230. Anytime that you have an expense, it will be a debit of $230 in this case. How do you pay your phone bill? You pay your phone bill with cash. So cash decreases, it's going down. So that means I'm going to credit the phone bill for $230. That is letter G. Sorry about that. G right there. So now I have a debit to phone expense. I've got a credit to cash. Debits equal credits. Okay, don't forget that. That is letter G. Letter H, you earned revenue on account, $4,500. So you provided a service, but you have not gotten paid. The services is complete, so I need to record my revenue. Okay, so I provided a service for $4,500. This is letter H. But this time you haven't gotten paid. You're going to get paid next month. Where do you record money that is owed to your business? Think. Where do we put money that is owed to us that we're going to collect later? Anytime money is owed to the business, we're going to set it up into our accounts receivable so we can keep track money that we are pending to receive. Okay? Payable is when we owe money. Receivable is when someone owes us money. Okay, so I'm going to set up a receivable. So what's going to happen to my receivable? Is it going to go up or down? Well, your receivable is going to increase because someone owes you money. So we're going to set up our accounts receivable for $4,500. Okay, This is letter, what letter is this? Letter H. So many transactions, okay? So I've got a debit to my accounts receivable of 4,500. I've got a credit to service revenue for 4,500. So my debits and my credits equal, okay? That is letter H. Letter I, you purchase office supplies for cash, 160. So what did you buy? You bought office supplies. Do you have more or less office supplies? Well, you bought office supplies, so you have more. So because you have more, that's an increase. I'm going to debit my office supplies by the amount of 160. So we've got office supplies, letter I. How did I pay for my office supplies? It says here you purchase them with cash. So your cash is going to decrease. So I'm going to go ahead and put it on the credit side. 160. This is letter I. Okay. Hope I haven't lost anybody. Just make sure that after you finish this transaction, you figure out, okay, I've got a debit for supplies. I've got a credit for cash. Debits must always equal your credits. Okay, letter I. Letter J. You paid wages to the assistant of $800. So you're paying your assistant for their work, okay? So where does that go? That goes under salaries and wages expense, okay? We are paying $800. Expenses are always increases, and those are debited. So this is letter J, okay? How do you pay the employees for their work? You have to pay them their payroll. How do you pay their payroll? You pay it with cash. So cash is going to decrease because you're paying the payroll for the assistant. That is letter J. Okay. So I've got a debit to salaries and wages expense, and I've got a credit to cash. We are in balance. That's letter J. Letter K. You purchase a 1-year insurance policy, $1,100. Okay, so we bought a policy that would go under prepaid. So now do you have more or less of the policy? Well, you bought a policy, so that means you have more. So we're going to increase our prepaid by the amount of 1,100. Okay, so we've got 1,100. This is letter K. Okay. Now, how did you pay for your policy, insurance policies? It says you purchased a 1-year policy. So if you purchased it, you paid with cash. So I've got an 1,100 decrease to cash for letter K. Okay, letter K. Letter L. You receive cash from services performed in transaction A, 3,400. So let's look at transaction H. So remember, we earned revenue on account for 4,500, but they hadn't paid us yet. Now they're giving a partial payment of $3,400. So we receive cash for those services performed. Now in transaction H, we've already recorded the revenue account. Okay, that has already been recorded. What we need to record today is the collection of what is owed. So that accounts receivable balance needs to decrease. Okay, I no longer need to collect 4,500 because they just paid me. How much did they pay me? They paid me $3,400. So for my accounts receivable balance is decreasing. It's going down. It's decreasing with a credit by $3,400. Okay? So whatever is owed to me is decreasing. Now it says here that you received cash. Okay, now you've actually gotten paid for it. So cash is an increase of $3,400. And this is for letter L. Okay. I've got a debit to cash. I've got a credit to accounts receivable. So now the balance for the receivable has decreased by $3,400. Your cash has increased by $3,400 because that is the amount that we've collected thus far. Letter M. You paid you paid cash for gas and oil expense on the van, $155. So we paid cash for gas and oil. So gas and oil is an expense account. So we paid cash for that. And the amount that we paid for our gas and oil is 155. This is letter M. Okay. How do we pay for the gas and oil? According to the problem, you paid cash for the gas and oil. So gas and oil is an expense account, needs to be debited. I paid with cash. That means I have less cash now of 155. That is transaction M. Okay. We're almost there, guys. Letter M. Letter N. You purchase additional equipment for $4,200, paying $1,500 in cash and spreading the remaining payments over the next 10 months. Okay, so what did we bought? We bought more equipment. Okay, so my equipment's going to increase with a debit. So debit increase. So my equipment is going to increase by $4,200. This is letter N. How did you pay for your equipment? It says you paid $1,500 in cash. So cash is going to decrease because I paid this in cash. This is letter N. And it says the rest and the spreading the remaining payments over in the next 10 months. So I'm going to owe, let me see how much I'm going to owe. I bought the equipment for $4,200. I paid $1,500 in cash. That means I owe $2,700. Where do we put the money that we owe? This is debt. So we owe $2,700. That means my accounts payable is going to increase by $2,700. Your debt has gone up. You owe more money because you just bought that on account. Okay? So, letter M. N. This is letter N. I'm sorry. Letter N. Okay? So letter N, $2,700. That's an increase to your liabilities. Okay? So when you buy on account, you credit. When you make payments, you debit for your liabilities. That is letter N. Letter O, you earn service revenue for the remainder of the month of $3,500. $1,900 is paid in cash. $1,600 is on account. So we provided a service totaling to $3,500. So we have to go and record the revenue because we did earn it this month. So we recorded $3,500 of service revenue. Why am I crediting it? Because a credit to revenue increases my revenue balance. Okay, and that's what we want. We want to increase your revenues. So the credit balance is $3,500. That is letter O. Okay. Now, I provided a service for $3,500. How did I get paid? Well, according to the problem, let's look at letter O. $1,900 was received in cash. So if they paid you cash, is that going to increase or decrease your cash? Well, it's going to increase your cash. That means we would need to debit it. Okay, so we're going to look at letter O here. Now, it also said that the remaining balance, $1,600 on account. So if we owe that money, where are we going to put it? Okay, or I'm sorry, it says that the $1,600 is going to be on account. We earn services for the remainder of the month. $1,900 was collected today. $1,600 is on account, which means that we're going to collect it next month or in a future point in time. So where do we put money that is owed to us? We don't owe the money. We are going to collect the money. Someone owes me money. So remember, anytime someone owes you, the business, money, we have to set up a receivable. Does the person owe you more or less money? The person owes you more money. So if they owe you more money, that is going to be a debit to my accounts receivable. And they owe me $1,600. So my receivable is going to increase. Okay, so what happened here? I've got two transactions under assets. I've got the cash that I got for $1,900 plus the receivable that I set up for the balance due for $3,500 total, which is my credit entry for my service revenue. So I've got two debits that equal $3,500. I've got one credit that equals $3,500. We are in balance. Okay, last but not least, the owner did a withdrawal at the end of the month for $2,900. We've got an account called the drawing. This is where we keep track of the money that is withdrawn from the business by the business owner. So if we are making a withdrawal, we need to keep track of all of the withdrawals. The withdrawing will always be debited. Okay. In this case, the withdrawal was for $2,900. Okay. So the drawing account is going to accumulate, just like the expense accounts, they're going to accumulate the money taken out of the business by the owner. That was $2,900. Now, we gave the business owner money. When we gave the business owner money, did our cash go up or down? Well, your cash decreased because you gave them money. So you have a $2,900 decrease for letter P, okay, offsetting the withdrawal from letter P over here for drawing, okay? So the drawing gets debited, the cash gets credited, and we are in balance. Okay, so these are all of the transactions that we've analyzed. We figured out where they go, which accounts are being affected, and if it's a debit or a credit. Here, I want to make sure we pause and you understand what we are doing. You have to identify which account it's offsetting and then figure out, should I debit or should I credit? Okay? And depending on the type of account is what you're going to do. It's not the same for everybody. So you see, for assets, a debit increases, a credit decreases. For liabilities, a debit decreases and a credit increases. So it has different rules. That is why it's very important that you always keep this handy. That way you know, okay, if it's an asset and it increases, I debit. If it's a credit, I decrease. If it's a liability and it's increasing, I credit. If it's a liability and it's decreasing, I debit. That's why it's very important that you memorize this figure 3-2. Now they're asking us, we did number 1, enter the transactions into the T accounts. Now they're asking us to foot and balance the account. Okay, so I'm going to foot and balance. I'm basically going to do the total of the debit side and the total of the credit side. And I'm going to put those in another color, maybe in red. Okay, so I'm going to do that, and then I'm going to add my debit and my credit side separately. So here we go. Okay. Now, these are my footings, okay? The footings, okay? Because it's asking you to foot and balance. So my footings is you add all of the amounts on your debit side and all of the amounts on your credit side. Now I have to figure out my ending balance. Now, this is an asset account, okay? If you look at your figure 3-3, assets will always have a balance of a debit. Your balance needs to be on the debit column. Okay, so that's why this is very important. If it's an asset, the balance needs to be on the debit side. So usually the balance is on the side with the highest balance, okay, which it is in this case, okay? So I've got 37,800 minus 15,995. That means that my balance is 21,805. This is my ending balance for cash. That is how much cash I have. The red numbers are the footings. The red numbers are the balance for that column. Okay? We're going to repeat this step for all of the accounts. We have to calculate the footings for the debit side and the credit side. Okay? And I'm going to put the footings in red. Okay? And in this case, we only have one, so it will be that. Okay? Now, remember, if it's an asset account, the balance should be on the debit side. So I'm going to go ahead and I'm going to do the 6,100 minus the 3,400. That's going to give me an ending balance of $2,700. Okay? So that is my balance for my accounts receivable. Supplies, I only have one, so that is my balance. I don't have to do any math. Okay. Prepaid insurance, I only have one. I don't have to calculate the balance. That is the balance. Okay. For equipment, I don't have anything on the credit side, so I don't really have to foot it. My balance is the sum of these two. Okay. So for equipment, I've got a total of $8,200. Okay. Van, I only have one, so I don't have to do any footings. It's just the balance it is. I'm highlighting the ending balances because we're going to need that to prepare our trial balance. Okay. Now let's do our footings for accounts payable. Okay. So I've got 2,300 on the debit side, and I've got, let's see how much we have. I've got 6,700 on the credit side. Okay, so for liabilities, let's look at liabilities. For liabilities, my normal balance should be a credit. Okay, on the credit column, your balance should be. Okay, so the credit balance is higher than the debit balance, so my balance is going to be over here. So my balance is basically going to be the 6,700 minus the 2,300. My balance is 4,400. So this is what I owe as of the end of the month. Okay, I used to owe 6,700, but then I made a payment was made of 2,300. So now I only owe $4,400. That is the debt, the total debt that I have. Okay. For capital, it's only one transaction. That's my ending balance. For drawing, I only have one transaction. That's my ending balance. For the expense accounts, we only have one expense account in each. So those will be my ending balances. Remember, for the capital account, okay, let's look over here. The capital, the balance should be on the credit side. Is it? Yes, it is. For the drawings, the balance should be on the debit side. Okay, so the drawing is on the debit side. We are good. Okay. For expenses, let's look at expenses. For expenses, the balance should be on the debit side. Okay. And if we look at all of our expenses, the balances are on the debit side. Okay. And then last but not least, we've got our revenues. Revenues, we have 3 transactions. Let's get the sum of those 3, and that's going to be our ending balance. We don't have any debits, so we don't have to worry about it. So this is going to be my balance of 15,500. Let me just expand it a little bit. There we go. Okay. So for the revenue accounts, if we look back, our revenues, my balance should be on the credit column. Okay, which it is on the credit column. So now we have entered all of the transactions into the T accounts. We footed and balanced each of the accounts, and now we are ready to do the last part, which is to prepare a trial balance as of May the 31st. If you did all of your T accounts correct, then you shouldn't have any problems, okay? So what we're going to do is we're going to bring in the accounts in chronological order, in the order listed, assets, liabilities, and then owner's equity, okay? So we're going to bring in all of our asset accounts. We've got cash. We have accounts receivable. We've got supplies. We've got prepaid insurance. We've got equipment, and we've got van, okay? Where am I getting those from? They're listed here. These are your assets, okay? Now we're going to pick up the ending balance. Cash, I've got 21,805 debit, okay? Make sure you put it on the correct one. So I've got 21,805 debit. Accounts receivable, I've got 2,700 debit. I'm picking up the ending balance. 2,700 debit. Okay. For supplies, I've got $160 debit. So I'm going to bring that in. For supplies, $160 debit. For prepaid insurance, I've got 1,100 debit. So we're going to bring that over. For equipment, I have 8,200 debit. Okay. And then last but not least, I've got the van, 6,000 debit. Okay. These are all of my asset accounts, and they all have a normal balance of a debit. Why? Because that is the normal balance. If you look at figure 3.3, assets have a normal balance of a debit. Okay, so all of your assets should have a debit balance at the end when you balance them out. Now we move on to the liabilities. We only have one liability, which is my accounts payable. Okay. How do I know I have one liability? It's given to us. I've got liabilities of accounts payable. If I look at my liabilities, I've got a credit balance of $4,400. Remember, liabilities have a normal balance of a credit. So if we go back, we look at liabilities, normal balance of a credit. Okay. So I'm going to go ahead and I'm going to put that liabilities, accounts payable. I've got a balance of $4,400 on the credit side. Remember, all of our numbers are positive. We just know if it's a debit or a credit based on the accounting equation that we have provided to you. Okay. So that is accounts payable. Then we're going to start off with our owner's equity section. We're going to have RW capital. For RW capital, I've got a credit balance of $25,000. So I'm going to put that on the credit side. Okay. After my capital, I have my drawing. Okay. So I have, and it's not RQ, it's RW, guys. Sorry about that. Why am I doing RQ? It's RW. Okay, there we go. So we have RW drawing. Okay. And for my drawing, I have a debit of $2,900. So I'm going to put it on the debit column. Remember, we have a debit and credit. I'm putting it on the debit because that is where it's located, on the debit side. Then we have our expenses. We have rent expense. We have salaries and wages expense. We have phone expense. We have gas and oil expense. Okay. You know what? The expenses should be at the very end. We need to, before we do the expenses, let's bring in our revenue. And we leave expenses for the very end. Okay, so we've got our capital, our drawing, and then we're going to do our service revenue. So because we need to have them in order by capital, drawing, revenue, and then the last thing we have, or we bring in, are our expenses. Okay, so let's do our service revenue. We've got a credit of $15,500. Okay, and then we bring on our expenses. I've got rent expense, debit of $850. This is where I'm picking it up. I've got salaries and wages expense of $800. I'm going to debit of $800. Then I've got my phone expense. I've got a phone expense of $230 debit. And then we've got gas and oil expense of $155 debit. Okay. And those are all of my expenses. Okay. So what I've done on my trial balance is basically just pick up the ending balances of each of my accounts. Okay, and transfer them over to my trial balance. It starts off with the name of the business, the title of the report, this is a trial balance, and the period that we're doing it as of. Okay, we've brought our ending balances over. Now we need to make sure that if we're in balance. Okay, so we're going to do our totals. Our debits must equal our credits. We're going to add our debit column. It gives me $44,900. I'm going to add my credit column. And it gives me $44,900. So we are in balance. My debits equal my credits. We are good to go. Now this doesn't guarantee that you posted everything correctly. It just means that you've maintained the accounting equation in balance. There could still be potential errors. Maybe you put an item in the wrong account. We're not going to be able to know that. Because you did categorize it with the correct debit or credit. All we know using the trial balance is that we are in balance. Our debits equal our credits. We are good to go, and we will assume that everything is correct. Okay? So this is a fairly long problem. It will help us better understand the analysis of transactions. what is happening using T accounts. It helps us understand how to foot T accounts, how to balance T accounts, and then once we've got all of our numbers calculated, we can simply prepare a trial balance. Okay? Please make sure that you do read the chapter in its entirety. You complete all of your homework. 2 attempts are provided. The highest grade is retained. The more you practice, the better you will get at it. Okay? That is it for Chapter 3 lecture. Until next time, have a wonderful rest of your week. Bye-bye.